Welcome to the Applied Blockchain podcast, where blockchain technology and innovation are in the spotlight. My name is Ben-Ari, and I'm the founder and CEO of Applied Blockchain, and I'll be your host as we dive into relaxed conversations with industry experts and thought leaders to get their views on what they're building, the Web3 ecosystem and its transformative impact on the modern world. Rita Martins, welcome to the Applied Blockchain podcast.
Thank you. So good to be here.
So Rita, for our listeners, tell us a bit about yourself, where you're from, what your background is, and how you got into this space.
Yeah, so I'm Rita Martins. I'm originally from Portugal, but I live in London for 11 years now, a long time. And I started my career in consulting. So I started really working with the different financial services, so different banks, and really going into the banks and understanding where they are now and where do they want to go to, and helping them either from the people side, from the technology side, or even if they want to go into a new market or to a new country. And then after that, I went into the bank side. So I went into HSBC because when you are in consulting, you get a really good breadth of understanding of the industry and the goods and the bads and what everyone is thinking about. Mm-hmm. But you don't have enough time to really go deep into the systems and how the different systems work, how the different data complexities that they have. So at HSBC, I really had that time to go into much more deeper into the different processes, the systems, and really understand why is it so hard to innovate at a big bank. So I have always
Why is it so hard to innovate at a big bank?
Well, how long do we have? I think like big banks, they have grown, many of them, they have grown through acquisitions. And so they will have actually quite really complex data systems. Yeah. If they are so global, sometimes they will have systems that they have different versions in one country versus the other.
Yeah, they've also been around for many years, so I guess
yes.
they've just built up their systems over time, and
yes,
there's different generations
exactly.
of systems in there and all that kind of thing.
Yeah, exactly. I just saw actually on LinkedIn the other day saying that AI is going to help with COBOL migrations, and that's one of the complexities of big banks is you have these different legacy systems and language that it's really hard to then how do you migrate that? It's really complex and big projects.
Yeah. And so what did you do at HSBC, or what type of work was it? So
I was doing Fintech Partnerships, so really connecting with different startups, understanding what is the technology that they were using and seeing if we could use internally at the bank, mm-hmm. or even collaborate and do something together for the clients. Okay, and what's the strategy there? How do you decide who to work with? What do you look for? Because I imagine there's hundreds, if not thousands, of these fintech startups around. Yes, exactly. So it would really be two angles. So one angle will be if starting with an internal problem or an internal area that we want to really solve for, mm-hmm. and then going to the markets and seeing which startups are already there, what they're doing, how along the journey have they been, and how we could use them. The second angle will be really just to have different conversations with startups and learn about something new, either a new technology that they're using, either a new way of thinking that they're using, and that will then tell us, okay, we need to look into this. So there is always like two different ways of starting. Was there ever a case where you start talking to startups and you say, oh, there's something really interesting here, we should go into this or dig further into it? Yes, for sure. We had many conversations where we didn't think there was much there because we weren't looking into that specific area of problem. Yeah. And then we were so impressed with the way that the startup were thinking and what they were building that we said, well, let's definitely connect and let's definitely have further conversations. Okay, interesting. And then what did you do next from there, or how did you get more involved in blockchain? So in blockchain, I actually looked into blockchain when I was in the consulting times. Oh, wow, early. Yeah, so I was at Accenture, and I have always been at this intersection of technology and business side. I'm not a technologist, but I'm really good at bridging both worlds and explaining to a business, why do we need to speak with a startup, what it is that's in there for you. And then speaking with the startup, understanding, okay, what is technology that you're doing and why is it interesting? Mm-hmm. So when I was at Accenture, there was a time, I think it was around 2017, that I was working specifically with finance teams within banks.
And finance teams, they spend a lot of time just doing reconciliation. So they take different data from different systems, then they put into an Excel, they reconcile, they create some sort of dashboard, and then they send an email explaining everything that they have done. And there is a lot of people doing this across the world.
Yeah.
So,
was this in a particular area of business, or?
It was around, we call them like almost like the back office.
Okay.
So the finance teams, the compliance teams, the risk teams, there is a lot of this just reconciliation.
Yeah.
And when I was at Accenture, I actually found that they were working with a fintech that was using this digital ledger for reconciliation. And so that for me, really, it was almost a light bulb moment where I thought, well, this is really going to change finance, because if everyone can see the same ledger, then you don't have to do reconciliations.
Yeah.
So I was very excited at the time, but let's just say that it was too early. It was too early for the technology. It was too early to even have this conversation with the clients. But I still kept looking into it from a personal side. And then engage again when I was at HSBC, looking into some of the different startups that were using blockchain, how we could use it internally. And last year I took some time off and I wrote a book around it, because, you know, I still find that within our little space, everyone gets it. Everyone really buys into blockchain.
Yeah.
But when you go slightly outside, actually many people they don't get it. They still think it's Bitcoin or it's bad and it's just frauds and scams. Yeah. So I really just wanted to write a book for anyone who is working within financial services, who is working in a bank, to really understand what does it mean? What does it mean for me? How is it going to impact my work? How can it benefit some of the processes that I'm using? And to showcase some of the big banks and big financial services who are already doing some interesting things.
Yeah. And what's the book called?
It's called Web3 Financial Services.
And where can we find it?
Well, it's on local stores, or on Amazon. It's also really easy to find it.
Yeah. Okay, amazing. It's interesting to see how different people got into the space. So you were looking at corporate banks specifically and reconciliation, and that was kind of the trigger. I think of my own story. I was working at a bank at the time, and I was looking at integrations. So you talk about the different systems in the bank. I was working on getting them to talk to each other for different types of solutions, and to talk to entities outside the bank. And I was looking at I worked with different integration technologies. And you have things like APIs, and then you have secure messaging or reliable messaging. And I saw this as another technology layer to make messages more secure, right, and more in sync, I guess. So, and that was my trigger. That was, there's a really interesting thing here for exchanging value rather than just exchanging data.
Yeah, it's interesting. So it was similar angle, I guess. It's like the technology angle that we started with. Yeah. I know a lot of people that start looking into this space from the Bitcoin side as well, which is interesting. You know, like just looking into how can I make money? They had all these interesting stories, and then they come into the infrastructure and technology side. But it's I think whatever you start, I think it's sometimes hard to start because there is so much noise, so many different angles that you can look into. Yeah. But once you start looking into it, then I was just fascinated around how many different angles you can have around these, how many different areas. So you have the infrastructure that we're talking about. There is the investment angle of using Bitcoin and now ETFs, but there is also the angle of digital identity and how you can use that across so many different industries. Yeah. There's the whole thing around just influencers and that new angle around how to use NFTs and everything else to create your brand and to really own and to get paid much more than you, for example, within the music industry, where they don't get so much revenue or really they paid as well as they should sometimes. So it's quite interesting.
We built on that for that.
Yeah. So I think it's definitely like an interesting area, and one that it's always evolving so much, and I don't know how is your experience, but I look back at when I start looking into it, and it has evolved so much from that time.
Yeah, I think yes and no. Right. In many ways, a lot of things have moved forward. In other ways, we're still very early.
Where do you think we could improve?
It's interesting. We took part in a hackathon recently, and when I spoke to people involved and looked at the use cases, like one of the use cases that came up was trade finance, right? And trade finance is a use case that was also around in 2016 when we started, right? And actually there have been many failed attempts at trying to further digitize and then use the blockchain to improve trade finance. And it's such a paper-based system. I think it's like 4 billion pieces of paper. I don't know even what the frequency is, but it's like it's so ripe for disruption and digitization and blockchain all the way through to like payments and securitization and whatever. And we looked at it now, and there were two insights. One is that we've got a lot more now than we had before. So we've got some payment methods, like even stablecoins we didn't have then.
Yes.
Right?
Yeah.
So we've got some method of payment. We've got better privacy technologies, right, which we need for commercial privacy. But on the other hand, we're still not there, right? And we still don't have adoption, and it doesn't look like we're close to it yet. And so there's still like the critical mass, certainly in that area, it hasn't hit yet. And for me, a lot of it is you have 1 + 2 + 3 to then get 25, right? At the moment, you've got 1, right? You haven't got 2 and 3, something like that, right? It's like...
Yeah, I know. And interesting you talk about stablecoins. I mean, I think one of the key things within the industry is still like we still don't have that payment layer.
We don't have the payment layer.
So you have the assets that have been or starting to be tokenized now. So you can actually move some of the assets, but you still don't have the payment layer. So you can still not do DVP, for example.
Correct.
Which is quite a big one. Look, I think there is definitely still areas to improve. We're still not there, but I think we are going to get there. Like sometimes people think, oh, it's already 10 years and we haven't done so much. Like if you think about other technologies, cloud is still being implemented.
Yeah, you know? I look at AI because AI, you know, I was learning computer science with AI courses in neural networks, which is the same like core model behind GPT in 1992, 93, right? And look how long it's taken to really reach some kind of critical mass. And I think that's much easier than blockchain because there you can do it on your own, right? You just need the computation and data. You're not dependent on anybody else to develop that technology or that capability.
Yeah.
Whereas blockchain has so many moving parts. I mean, you need everybody else on. You're dealing with value, so you've of course got all the regulation and payment and incumbents and all the rest of it. So it's so much more complicated, I think. And then if you look at it in that context of, I don't know, 15 years or however long since the technology was conceived, it's not really a long time at all.
Yeah, no, I agree. I think we are getting there. We are much better. And I think like the different components are coming together. So we talk about payments, but then there's also regulations, for example, which is becoming much more clear. Regulators are looking to this space. And look, we can have different views around do we need regulation or not, but it does help if you think about traditional players coming into this space.
Yep.
If there is clear regulation, good or bad for innovation, it does help some of the traditional players to really get engaged into this. And the reality is that liquidity, the big liquidity within financial services is still within traditional players. So connecting those worlds, I think it's going to help a bit the traditional world and the DeFi with all the innovation, interesting things that they have. I think that would really bring much more the scalability and the adoption that we want to.
Yeah, agreed. I think the payment layer that you touched on, that's critical, right? Because I think you're right. We've got people experimenting with the assets, and I think we've almost separately got people experimenting with payments.
Yes.
And I think part of the problem there is that I guess in the crypto world, we have crypto and stable coins, of course. That's there. But if I look at the regulated institutions, a regulated payment institution, that just to be regulated in that way is a big thing in itself, right? And so anyone who's doing payments in blockchain and is going to be a regulated payment entity probably can't do anything else on that blockchain.
Yes.
And so you've got there, that's an example of where you've got the regulation really creating a wrapper around the technology, which then means you can't bring the things together in the way that would allow you to get the most out of the technology. You end up with a payments blockchain and an assets blockchain, and you've somehow got to get them talking to each other. And if you're doing that, you're not actually transacting on a blockchain anymore, right? You're transacting across two different ones, and you lose a lot of the efficiency. So these are some of the challenges that I kind of see from a technical perspective. It doesn't mean that these aren't great things that are happening, but they're just, they're going to have to evolve to come together at some point in order to get the maximum efficiency, the kind that we see in the crypto world, actually.
Yeah. No, I agree, but I think we have evolved. So when I was researching for the book, one of the things I saw that, like, for example, tokenized bonds. I mean, we have, like, across the board, we have tokenized so many bonds.
Yeah.
The early use cases, it was in which the bond used to be tokenized, so the asset is digital now, but it was still an offline payment.
Yeah.
Now, I think what we have seen throughout the last few years is that actually, like, even within banks, many of the banks now have some sort of tokenized deposit, which is, okay, it's not 100% digital money, but it's almost like a new generation of how do we think about the digital component. We have stablecoins, which in the last year just suddenly boomed, in which is used for cross-border payments as well. So I think, like, we are starting to get, like you're saying, we start to get, like, different companies looking into the assets and then looking into the payments. But the same companies, so for example, the banks, they're now looking into both use cases. And I think eventually we're going to see them coming together and actually start to say, how do we have both on the same chain, on the same system?
Yeah, it's interesting. There's a lot of sort of what might appear to be small developments that might even go unnoticed, but then they're compounding. So if I think about, like, more the enterprise and institution space, there's SAP integrated stablecoin payments, right, into the finance solution, right, which is used in most enterprises. So if you want to pay anything in an enterprise, it has to go through the SAP finance platform. That's how all payments get approved. There's normally a file that comes out of that with a payment instruction that goes to the bank. That can now issue a stablecoin payment. So that puts stablecoin payment capability into the hands of corporates, and that's a small thing that didn't even make the headlines in the blockchain. So we get these steps, which again they kind of seem small, but then they compound.
They compound. Yeah, I totally agree.
Yeah, it's the same thing with the regulation. You kind of got improvements over here, then someone does something over there. Obviously, we've got the change of regime in the US. That might not be so small, but all these things are kind of, they all do something, and then you start putting it together. And I think at some point, we'll look at it and it'll come together in a bigger way.
Yeah, no, I agree. I think, like, small things. And it's interesting, I always use this story around, like, especially if people coming from DeFi, they have almost like this feeling of they haven't done enough because they come with this big vision of changing the world. And there's almost like this discontent of, oh, we haven't done enough, we haven't done what we intended. But if you think about
from the DeFi players?
The DeFi players, yeah. But if we think about it, like, they actually have done, we might think of them small changes, but they're actually really big changes. Stablecoins is a new form of money. Like, a few years back, money was just your coins, what you had in your wallet. Then it moved into being what is in your phone, so your digital wallet. But it was still the same form of money. It was issued by central bank, and then you had the commercial bank money from the banks. Actually, stablecoins was something that it came from the DeFi world. It came from this innovation, and we might think it's still a small thing and it's still only used by emerging countries and it's still being used by DeFi. But the reality is that they have changed the notion of money. Money is no longer just issued by a central bank or by a commercial bank. So sometimes I think within this industry or blockchain, we think about, we had this big vision and we haven't delivered. But the reality is that little change, it's super impressive, and people should be really pleased that they have done such a big change, actually. So sometimes when we do innovation, we think about this big vision, and we don't, because we haven't done that in the first 10 years, we think we haven't succeeded, but actually you have done a really big change of changing the notion of everyone's money, changing the role of a central bank, which is super impressive.
Which is huge. Yeah, I mean, it's interesting. I think crypto and DeFi, you can kind of think of it as a sandbox in a way. But what it's done is it's working.
right? From a technology perspective, the stuff there works, right? People use it. There's a lot of value on there already. It just does what it's supposed to, and you can see the efficiencies. It's a little, I'm trying to think of an analogy. It's a little bit like when Apple put out the iPod, right? And they didn't initially they didn't have deals with the record companies, right? So the technology was there. You could have 1,000 songs in your pocket.
Yeah.
But you couldn't. But there wasn't much to listen to.
Yeah, you couldn't use it
because it didn't have the industry support. And then they went and got the deals with all the companies, and suddenly you can have everything on there, right?
Yeah.
So the technology's there, but it's not mainstream. It hasn't got mainstream adoption, and the big players aren't all on it yet. But I think the technology in itself is there and working, right?
Yeah, someone was describing, the analogy was the cars and the roads. So now we have the roads, or we have some of the roads, I think. We now need to connect them. We need to create the bridges to actually connect one country to the other. We have some cars, which is your assets, which is your payments. Now we just need to actually have people using those cars within those roads. So we're not that far.
Okay. Very good. I mean, can you talk about anything that you're looking at in your current role? Areas of interest, things you're allowed to talk about?
Yeah, so I cannot really tell much about what I'm doing right now. So I work at London Stock Exchange. I'm the head of ecosystems for DMI. And it's a similar role to the role I had at HSBC. So connecting with the industry, connecting with some of the companies and what they're doing, and seeing how we could use it for what we're building internally. We will be able to share much more next year. We are currently in building mode.
Yeah. Okay. Very good. Rita, I ask all our guests if there's anything they'd recommend in terms of material, right? You've obviously got your own book.
Yes, I'll recommend my book.
Yeah, and we'll list that with the podcast as well in the materials. I guess you drew on a lot of, you'll have drawn a lot of material for that, but also in your day-to-day work. Where do you go to? What are your sources of material? Are there podcasts or books or journals or things that you?
Yeah. And it also depends how people like to get information. I usually like to read, or I like to listen to conversations as well. So I have a lot of books. My book is a good one, but there is also another interesting one. So there is the one from Chris Dixon, the Read, Write, Own, which is a bigger one around blockchain and this concept of Web3. In terms of podcasts, I think your one is also a really good one. There is a few other interesting ones. There is the one from Mauricio Magaldi. I don't know if you know him.
Oh, he's fantastic.
He does two ones. One is a long-term interview with someone, and then he does this 15 minutes around what is the latest news. And I think that's a really good one if you just want to know what's ongoing in the news. And then I also use LinkedIn, for some of the news. I follow a few different people, and they always share what is the latest in the news, and they will share reports as well around what's happening. So there is quite a lot. Just follow a few different people that and then you'll be able to get more.
Yeah. Okay, very good, Rita. Is there anything else you want to cover that we haven't spoken about?
No, I think, is there anything else? Look, I think it's definitely an interesting area. There is so much going on, and I know you're also working on it, which is interesting. There is still this, probably the one, the public versus private question. There is a few other questions that we haven't talked about that I think are just as well a conversation that we are having within the industry. I don't think we haven't figured out what's the right way to do it, because within financial services, when you're innovating and when you're building new technology, this is people's money. So we need to be able to innovate and create, but still within the remits of making sure we are compliant, making sure we are aligning with what the regulation is saying. So I think as the industry evolves, as the technology evolves, we will be able to see some of these conversations and coming in and changing as well as we go.
Yeah. What's your view on the private versus public?
It's interesting because so in the book I did talk about this when I asked a few people. Public, it's definitely very interesting. It does, it's trade-offs, right? Public, super interesting, but it does lack privacy. And the reality is that I do not want everyone to know what transactions I do. If you think of a business doesn't want their competitor to know what they are doing, right? I mean, that's a big trade-off that you have when you use public. There is also regulation concern, I think, that regulators, at least until recently, they weren't super keen on regulating entities to start with public blockchain because of privacy, because of a number of considerations. And that's why many companies have then moved into private blockchains. I think private blockchains, they also lack as well. So there is the trade-off, which is, yes, you have privacy, you are able to much more own and make sure that you are the one that can see the transactions, but you don't have the scalability that you'll have with public blockchains. So I think this is going to evolve, and I think we are going to see public blockchains evolving much more, which we have already seen recently around how do we create public blockchains that are providing a bit of privacy, either through roll-ups, either through ZK knowledge proofs. But I think the public blockchains, they evolve, maybe we'll get into a new version, which is something that regulated entities they can use. So I think right now there isn't right or wrong. I definitely understand some of the different points of views.
It's another one of these. We talked about like what's changed since I guess since we started being in this space, and how a lot of things have moved on. This is one of those areas that's kind of still there.
Yes.
Right. And and you talked about one of the things that attracted you to the space in the first place, like your trigger was the reconciliation, right? Like being on the same ledger. And if you look at the way most private blockchains are structured, there isn't a single ledger.
Yes.
Right? You could do some kind of counterparty, like, I check with one party that we agree on something, I check with another party, but you don't have a single view of state. So there's, I guess in the compromises that we've made in originally getting privacy for the private blockchains, we've also given up on a lot of things that we could be getting from the technology. That's part of the challenge, I think.
Yeah, and I agree. I think everyone wouldn't disagree with that. I think the private blockchain vision, it's probably where we want to go.
We hear that more and more actually from people in the institutions, is that they can see something, they can see the limitations of the private blockchains, they can see something in the public blockchains that they want to have more access to, but obviously there's some issues there, as you said, as well. I guess my personal view is that the roll-ups potentially give us a new angle on that, because in the roll-up you can have, and especially like app chains, you can have your own environment or controlled environment with all the controls that you need, and at the same time roll up to a public chain where you're not revealing anything, but you're completely anchoring in the security, decentralized integrity of that parent chain, and you could potentially allow assets to be bridged up and down as well, if you wanted, or recovery to go up to the public chain and so on. So you can I can see how you start to use technologies like that to merge these things, or to try and get the best of both worlds, really.
Yeah, I think definitely like there are areas that I think everyone in the industry is looking into. There was a new report, I still need to read it, but the EU was actually talking about permissioned blockchains, and they were suggesting that should be the ones that the companies should be using. So I think as well, like we were talking about initially, the conversation has changed as we have mapped out what are the trade-offs, what are the things, the challenges that we want to address, and then the technology and the technologies that are driving innovation, then are creating different options. Now, probably as industry, we need to try those options and say which ones are the ones that they want to, which is definitely interesting. I think there was also this initial thought originally that, everyone wanted to own their own data and everyone wanted to own the nodes. But the reality is that often companies, they are building some of these. They don't want, and even individuals, I don't want to own my own data. I don't want to, have all the risks associated with that. Mm-hmm. And with companies as well, they are not, many of the companies within financial services, they are not technologists. They are not technology providers. So it's also seeing what's happening within the industry and then adopting what is best from the industry.
I think it's important to have the options.
Yes.
And this goes back to what you initially said about cash. Mm-hmm. Because I can have my money in the bank, or I can have my cash under the pillow, or I should be able to have my cash in digital form in a wallet that I have custody of, or maybe I want shared custody with a custodian.
Yes.
So I think it should be about options and giving people these options.
Yeah.
If I know I can always bring my assets into my wallet, that gives me something. Or if I know, I don't know, the custodian or the bank can't disappear with my funds without my authorization as well, that will give me something. So maybe it's about offering more options to people.
Yeah, no, I totally agree. I think it's around options. Like different people will have different risk appetites. Yeah. They will care about different things. So some people care about actually owning their own data and owning their own money. There will be other people who just want someone to hold the risk for them and to have easy access to it. So it's going to really be around just having all different options. I think when I started looking into this space within blockchain, there was this idea that blockchain was going to take over and then we're going to stop having all the legacy systems and legacy services that we have right now. I think the future is actually we're going to still have some of those legacy systems. We're still going to have some of those legacy services, but we're going to have different options alongside those. So we're going to have stablecoins that you can use if you want to send cross-border payments, for example. You're going to have your self-custody wallet if you want to own your own crypto, or you can have it within a bank.
I agree. I think we can be naive as technologists and think, I can have my own wallet and now custody all my assets, and that's what everyone's going to want. It's great that you can do it. Some people will want it. You know what? It's good that I can do it. Maybe I'll put some of my assets in there, but actually I want most of them looked after by someone else, right? I don't want headache, or I don't want the right. So
that's exactly. That's the other thing is like you as a person or as a company, you may actually want to have all different options and use all different options for different things. So like, for example, if you're saving some crypto for your kids, maybe you want not to have a self-custody wallet because you want them to be able to access it if something happens to you, for example. So exactly, I think optionality is going to be key, and people and companies might even use all different optionalities for different things.
Yeah. Okay, Rita, fantastic. Very good having you on. I'd love to have you again in the future where we can see a few years later what's changed or what things have happened. Thank you very much.
Thank you.
Thank you for listening to the Apply Blockchain podcast. Make sure you follow us on LinkedIn and Twitter for more updates. I hope you enjoyed today's episode, and if you did, please let us know by leaving a review and clicking subscribe. Until next time.